Many in the insurance industry have been watching the problems unfold at New York-based AIG over the last several weeks. In these exclusive interviews with Insurance Journal magazine, a number of state regulators talk about how AIG's problems will trickle down in their own states, but most see it just being business as usual.
The underwriting affiliates today remain as sound and solvent as they were 2 weeks ago. All the pressure was at the holding company level. So the enterprises that we, state regulators, have direct supervision over are performing as good today as they were 2-3 weeks ago. So that's a good story for consumers. They're protected, and if and when they present claims, they will be paid.
Well, obviously, from a state insurance regulator, we were concerned about the insurance companies that are under that. But however, they have been in very good shape financially. They're solvent, they're able to meet their claims, the book of business goes on. AIG, the parent company, obviously, that was a federal decision, but the impact that it would have had worldwide would have been very significant. So it's understandable, the federal intervention.
Early part of September, when AIG made some bad investments that were not insurance related, of the 71 entities that they control, all are insurance companies that are very solid on very solid ground. And AIG is important to my state because they write over $400 million in premium in our state. That does not include the surplus lines that they own. So they're crucial to our development.
The insurance companies that were the subsidiaries are regulated at the state level. And as such, we were responsible and remain responsible for those companies' continued financial solvency. And I'm happy to tell you that those companies were never, ever in peril. In fact, they're seen as the gold bricks in the vault, if you will, of AIG that will enable the carrier or the company to prosper eventually as they sell off good pieces to pay back that federal bailout and the federal loan.
It's consumer-oriented in both senses. Policyholders, their policies are protected. The insurance companies under AIG are solvent. Arizona has 2 AIG subsidiary companies, life insurance companies, and I want those policyholders to know that those companies are solvent. The money is there to pay those claims.
AIG operating units, the insurance companies that are part of the AIG group, all are solvent. I don't think they've been affected directly in terms of their operations by this loan. They continue to be in business. They continue to write risks. They are subject to state regulation, and they've been conservatively regulated by the state regulators. Where the problem has arisen has been in the holding company, which has, to the extent it has been regulated, it's been regulated by federal regulators. And there's some bad assets there, a lot of bad assets apparently, and the government the federal government's had to bail that out. The company's still right, they're open for business, and will continue to be that way.